Hello everyone, it's Friday, June 20. Today we're closely examining the euro and British pound charts to gauge potential market movements. The euro made several attempts to strengthening in early Thursday trading amid a light macroeconomic calendar. Market participants digested Bundesbank President Joachim Nagel's remarks and the outcome of the Eurogroup meeting, though the market response remained muted. As the day progressed and US markets were closed for a federal holiday, the euro faced renewed pressure. Attention then turned to the Bank of England's policy decision. The central bank kept its benchmark interest rate unchanged at 4.25%, which boosted demand for the pound sterling. However, the outcome of the vote defied market expectations. The BOE report pointed to growing concerns over the escalating Middle East conflict and weakening wage growth. In addition, policymakers noted some greater signs of disinflationary pressures from the labor market. While economists had anticipated a 7-2 vote to hold rates steady, the actual split was 6-3, with the minority favoring a full follow-up cut after May's reduction. Against this backdrop, the British pound rebounded, recouping most of its early losses following the third similar policy decision. Now, sterling faces two possible paths: continuing its bullish momentum or getting stuck in a wide sideways range, potentially breaking the bearish trend that began earlier this week. Turning to today's macroeconomic calendar, UK retail sales take center stage as a key indicator influencing the country's gross domestic product. Retail sales are projected to have declined by 0.2% month-on-month, with retail sales volumes excluding fuel also expected to drop by 0.5%. If these figures confirm expectations, they could strengthen the case of the Bank of England to consider a rate cut as early as August. As for the euro area, market participants will keep an eye on data releases, including private sector loan growth, M3 money supply figures, and the ECB's economic bulletin. However, these reports are unlikely to provide support for the euro. Meanwhile, in the United States, focus will turn to Philadelphia Fed Manufacturing Index and the Conference Board's leading economic index. These indicators are not expected to significantly shift the market balance either. Instead, investor attention may pivot to fresh comments from Donald Trump, and new remarks from the US president could sway market sentiment, potentially fueling further bullish corrections in risk-sensitive assets. Let's now move on the technical outlook. On the 1-hour EUR USD chart, a decline followed by a false breakout at 14.95 would trigger a buy signal. After all, the pair remains stuck in a sideways channel, and the mid-range area is key and will likely determine the balance of power between buyers and sellers. If the price breaks through and consolidates above 15.37, the euro could climb to 15.79 and then extend gains to 16.28. At this level, I would recommend going short on the rebound in anticipation of a 35-40 pip move. Short entries at 15.79 and 15.37 would be valid if a false breakout occurs, aiming for a move back toward 14.95. If buyers remain passive and the price breaks below 14.95, the euro could slide to 14.49, where long positions on the false breakout would again become relevant, same as at 14.95. Going long on the rebound would be relevant at 14.08 in anticipation of an intraday correction of 35-40 pips. Speaking of the British currency, a false breakout at 34.75 or 34.47 would provide attractive selling opportunities. Short entries on the rebound would also be reasonable at 34.17, targeting an intraday correction of 25-30 pips. For buyers to regain control, the price might break above 35.03, but that won't be easy as the current bullish momentum appears to be losing steam. If UK data disappoints, pressure on the pound could intensify. A false breakout at 35.03 would likely pave the way for a decline toward 34.75 and possibly 1.3447. At these levels, long positions would be appropriate following a false breakout. In a bullish scenario, the British pound could climb to 35.33 and then extend gains to 35.68. At this mark, I would recommend going short on the rebound in anticipation of a 25-30 pip move. Short positions at 35.33 and 35.03 should only be considered on the false breakout. Wishing everyone good luck and a great weekend ahead.